It's interesting from the government's perspective. So you look at the numbers and they go, hey, over the next 4 years, we're going to save $245 million by moving this away. Now, $245 million to you and me, hell of a lot of money. To the government, not that much money, and makes a huge difference to so many first home buyers. However, the thing they have said off the back of it, which makes you think about it a little bit differently, is they're going to take $140 million of that and put it towards funding 1,500 new social housing places, which does make you think a little bit more differently about it.
It doesn't, right? So to me, that is just a bit of political gesturing because, you're effectively pissing off every first home buyer in the market now, which is a pretty rough thing to do. So what they've done is kind of sandwiched this thing on the end and been like, hey, but we're going to give this money directly to social housing. That's not really how it works either, right? And to be honest, 1,500 new social houses isn't that much. So I think they're just doing this so you can't be that pissed off at them, right? Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today we're here to mourn the death of the first home grant.
We're back in your life on this Friday morning to talk about quite a sad thing, Mike.
Yeah, it feels like a bit of a funeral for first home buyers today.
Yeah, we know that your great auntie Gertrude, when she bought her first home, it was 3 shillings. It was a 1-to-1 debt to income ratio. Now it is far harder to buy your first home. And one of the things that made it a little bit easier, Mike, was that first home buyer's grant.
So basically the first home grants were a national policy from around 2010. They brought it in. And the general concept is the government chips in a bit of money to help you out with your deposit to get you on the housing ladder. Now, our customers love them. They're a great little sweetener. It's not often that the government is giving you back money for basically doing nothing and saying, hey, I'm going to help you buy a house. So everyone loved it. For a while there, it wasn't really working too well.
I do remember that point in time where the house caps were a huge problem, right? Like it was $675,000 or something like that in Auckland.
Yeah.
And then they bumped them up a couple $100,000 roughly, which made a huge difference. So Mike, just as a quick reminder, just run us through the numbers of who was eligible for the grant.
Yeah, so the eligibility for the first home buyer's grant came down to 3 basic different factors. The first, you had to have been contributing to KiwiSaver for the minimum amount of time, at least 3 years. And then there were some income caps, so $150,000 per the household. And then the last one was the regional house price caps. Now, I'm not going to run through the list of every region and every house price, but those house price caps were split into 2 different sectors. So you had your in situ properties, your existing house. You see a house, you go buy the house. That had a slightly lower first home buyer grant option. And then there was the new build house option as well. So the new builds, you could get $2,000 per year that you have been contributing to KiwiSaver for up to 5 years. So that's $10,000 that the government would give you to help with your deposit. And for those in situs, it was $1,000 per year for up to 5 years. So $5,000 that you could potentially get.
And since the rules have been changed, it's definitely made a huge difference. Like we've been seeing people take advantage of this. It really is a shame to see something going against first home buyers. You add, house prices and debt to income ratios, high interest rates, high inflation, cost of living, hard to save for your first home. So it is a really sad one. You buy a new build property, your income isn't particularly high. You buy a house under a certain cap. You and your partner could have had $20,000 between you, which is a really decent chunk. You think about, you buy something for maybe $700,000, you need a 10% deposit. That's $70,000, $20,000 coming from the government. Thank you very much, but it's not there anymore.
Yeah, and it was about 40% of first home buyers last year used this grant in some way, right? 12,000 people took that out last year. That is a huge amount of people who now wouldn't have that deposit to get them into the home. And, there's an economic argument here where, in a pure economic fashion, if you give someone a free $20,000, the price of that house will just increase by $20,000 because it will just be passed straight through from the developer to the purchaser or the seller to the purchaser. I don't fully believe that is actually what was happening. Our like from an on the ground perspective of how our customers were using them and the difference they made, it made a huge difference into actually just getting people in. And this is not getting them from, 18% to 20%. This is getting them to that minimum 10% deposit mark.
And if we lived in pure economic factors, being right, economists would be right all the time. But we know they're right, they're wrong 95% of the time. So, Mike, first question for those that are listening and have been thinking they might utilize this tool, or maybe they've got kids who they thought might utilize this tool. Is it all done from today, or do we still have a little bit of time?
You cannot apply for them anymore. Done and dusted, right? And I guess the reason you would whip it out quickly is so that you don't get a flood of people going to apply because they know that it's going to be gone. Because that kind of defeats the purpose a little bit when they're trying to save some money. But if you've already got one approved and in place, you've got 6 months to use it. So basically, if you have got that piece of paper, get going and find a house.
It's interesting from the government's perspective. So you look at the numbers and they go, hey, over the next 4 years, we're going to save $245 million by moving this away. Now, $245 million to you and me, hell of a lot of money. To the government, not that much money, and makes a huge difference to so many first home buyers. However, the thing they have said off the back of it, which makes you think about it a little bit differently, is they're going to take $140 million of that and put it towards funding 1,500 new social housing places, which does make you think a little bit more differently about it.
It doesn't, right? So to me, that is just a bit of political gesturing because, you're effectively pissing off every first home buyer in the market now, which is a pretty rough thing to do. So what they've done is kind of sandwiched this thing on the end and been like, hey, but we're going to give this money directly to social housing. That's not really how it works either, right? And to be honest, 1,500 new social houses isn't that much. So I think they're just doing this so you can't be that pissed off at them, right? Which I think great from a political perspective. But if you think about this kind of logically, right? So you've got, there's two different ways you can address kind of social issues, right? You can have the ambulance at the bottom of the cliff where you have the social housing, or if you kind of take a bit more of a proactive approach and make it easier for people to get into houses. We know that people who own houses, they have better stability. They are less likely to be on the dole. They're less likely to lose their jobs. Their kids grow up better because they have, a sense of security in a house. So I feel like instead of kind of making it easier or fixing a social problem earlier on and helping there, they're just shifting it with this token gesture of an ambulance at the bottom of a cliff of like, hey, we'll just mop some stuff up with this cash.
Before we move on, we talk all the time about planning and growing our wealth, but protecting that wealth is just as important. That's why having the right insurance in place can help when life goes unexpectedly.
And that's why this episode is brought to you by Partners Life, a New Zealand operated award-winning insurance provider with over 300,000 Kiwis insured and 89% of claims paid.
Partners Life understand that having some insurance is better than having no insurance. They have flexible and personalized solutions for any budget or situation.
Check out their website in our show notes below.
Yeah, but in terms of having stability in a household, I'd assume most people who are buying their first home are either renting somewhere or staying with parents or have some stability. We're talking the social housing waiting list has gone from, in 2014, about 4,600 to sitting at about 25,000 houses now. Mm-hmm. That money going towards social housing makes a big difference. And it's two groups. You don't really want to have to, let me finish. You don't want to have to pick between those two groups, right? You don't want to have to pick between first home buyers and producing more housing. The problem we're in at the moment, because of the spending over the last 6 or 7 years, is we don't have any money. We don't have any money to spend towards these things. And it's not like our economy is growing that's providing more tax dollars. So it's a tricky one for me.
Yeah, I'm not going to get into an argument with you here.
Oh, I love an argument. Let's go, Mike.
Right. The economy is not growing because we are in a recession, right? None of this, like more social housing or taking away this first home buyers grant is not going to grow the economy. I would argue that the first home buyers grant staying there would grow the economy more than the social housing. So I don't think that that's kind of really an issue. I think
part of it is just focusing on your expenses, right? Is like potentially the previous government might have gone, why not do both? Opposed to just going, we only have so much money to spend here in the current environment.
Right. And I would again counter that with our debt to GDP level as a country is so, relatively low for what we're doing that we can afford to borrow more for the right projects, with the idea that the increase in economic output and revenue will pay those back at a future date. And that is, when you look at that from a numbers perspective, New Zealand is far, far, far better off than a whole lot of other economies, right? And I get that National have come in and have campaigned on, we're going to cut costs and we're going to do this and we're going to do this. If they would just stop slagging labor off for the last 50 years or whatever, like, great, we get it, you don't like them. Just make some economic policies that aren't just purse tightening and that are actually going to improve the situation in the future. I don't think this is the right thing to do.
I think in terms of spending more money to create better infrastructure, better opportunities going forward, I agree with all that.
Yeah.
The problem is around the execution. And I think the average Kiwi would be okay, spending more on tax if they could see the output on the other side.
Yeah.
But the problem with, whether red or blue is actually seeing the output on the other side. And a good example is, you quote, hey, we're going to build this new highway. It takes way longer. The cost builds out.
Yeah. I think we're talking at singing from the same hymn book there. But again, for this, I just think this is such a poor choice. And the other thing is, the money that they save does not directly go into building 1,500 new homes. It's not like you take it from this credit card and put it on this credit card and spend that there. Like, it's all one pot of money. It will just get distributed back into that pot of money.
So let's move on to what first home buyers should do. So they've had something taken away from them, right? And in that example, they need a $70,000 deposit. $20,000 might have come from this in the past. That's been taken away, Mike. So what should first home buyers do now this has been removed?
Yeah, cool. So what we're really going to need to do is look, first of all, you can change the goal. So you can change, how much is the house that I'm buying? I was looking for 900. Now I'm going to have to look for 800 or something like that in terms of the purchase price. You can look at other options to see if you can get that deposit. So, there's potentially from gifting from parents or across securitizations. You have your parents' house, your new house. We chuck it in the same bank at the same security pool, and then you kind of lend against both of the houses. You can look at low deposit loans. So you can still get loans for as little as 5% deposit. There are a lot of hoops to jump through, but that is not too bad. And then with the low deposit lending, now is not the worst time in the world to be looking for that, right? So if it was 2 years ago or 18 months ago and you were saying to me, Mike, should I save a bit more or should I take out this low deposit loan, so a high LVR loan? We have a penalty interest. You don't get good rates. You don't get the cash back. I would be saying, if it was 18 months ago, right, you need to think about this really carefully because you are not going to have the advantage of an increasing housing market to build that 20% equity, because the housing market, we knew it was falling and was staying flat or falling. So you're going to be paying this loan off and your equity is going to be decreasing at a faster rate. Whereas now, if you're rolling 6-month fixed terms, you've probably got 12 months, 18 months where it might be a little bit flat or just starting to grow in terms of the price of the house, but you have the advantage of a rising house market. So the price of your house is going to be increasing and you're going to be paying it down. So you're going to get equity quicker in your house to that magic 20% mark, which is what we're aiming for, than if you had bought, say, 18 months ago. So I would say, prices are back. They're going to increase in the future. Maybe just jump in now.
Yeah, I think that's a really important point in terms of where we are in the market. So you've got really high interest rates. House prices have dropped quite a bit. Inflation is starting to come down, which means next year likely interest rates will come down and most economists are predicting house prices will start to increase next year. My big thing is do not let this be an excuse for first home buyers to go, I guess I'll never buy my first home. That's not how we want to think about it. It is going, what do we need to do? Where do we need to be able to buy our first home, to take that next step? Talk to your bank, talk to a mortgage broker, work out based off my income, what can I do? based off my deposit or the deposit I need to save, how far away am I? What kind of houses should I be looking at? We're not looking at, 3-bedroom, places in Herne Bay. What is our first step to get us onto the ladder, and then we can grow from there? That is where we need to think about. We need to be focusing about taking action, not going, this has changed, because at the end of the day, that's just outside your control. There's nothing you can do about it.
Yeah, 100%. So again, talk to a mortgage broker, talk to your bank, assess the options. There's a ton of different things we can do to get you on the ladder, but do not let this slow you down.
The other bit is, it's so often just when you look at two KiwiSavers combined, two like reasonable income combined, a little bit of savings, most people are most of the way there anyway.
Yeah, to be honest, they are. And it's again, as soon as you talk to a mortgage broker, they can put you in the exact numbers so you know where you are, right? Like, it's like, if you don't speak to anyone about it, you have no idea if you're 1 year, 2 years, 3 years away. Speak to a mortgage broker. They'll tell you, you're 6 months away. You can do it now. You've got to do this. You've got to save this.
Okay, I'm keen for your thoughts. What do you think about National taking away this policy? What do you think about them increasing the social housing numbers by about 1,500 housings? Do you think it's good? Do you think it's bad? First home buyers, keen to hear from you as well. Much love to Partners Life for sponsoring this episode. Please make sure to subscribe, review, and like. The podcast has a hell of a lot of momentum at the moment. We're getting out to lots of new people, so help us send our message out, and we will catch you next time.
Cheers.